almost like basics to understand that we are in an environment where we can trade or an environment that it's dangerous to trade. And we just wait a little bit and see what happens before jumping in. We don't have to take every trade, like I always say. The other thing that we look at as traders is whether or not we have upcoming news. And this is what typically happens if you have an FOMC, which we do have coming up on Wednesday. So traders are trading up and down and up and down, and the news is coming. And what they do is they pull back, and the market begins to just get slower and slower and slower and starts to kind of go sideways right before a news event. This is the worst time to jump into a trade just before a news event, because everybody is just holding off before the news is released, and then they make a decision. So if you're ever about to trade and you notice the market is just kind of not acting like it's moving, it's just going up and down and up and down, again, see if there's any news events that are about to occur, because if that happens, the market will explode in one direction or another, and that's when everybody jumps in, and then you're going to get stuck a little bit off guard, caught off guard when that happens. So that's something that I think a lot of traders forget about. What I'm going to do next here is remove and just go to a very naked chart without anything on the chart and explain, because I've got a lot of questions on what we did on Friday with the ABC method and price action. In this way I can answer most of your questions here. When you look at the three types of trading patterns throughout the day, they're different, very different. So when you have the morning session, we can definitely understand that we have a lot of volatility within the first 2.5 hours. So for today, you can see it's highly volatile, and we can expect that, and it's normal for within the first 2.5 hours. And let me switch to a 5-minute chart so we have a little bit more candles here, like this. So this is normal, absolutely normal. There's nothing here that we are looking at as far as why is this happening. It's completely normal. It's the first 2.5 hours. Now we have news during this. We have activity from buyers overnight coming into during the day. We may have news that happened over the weekend, but regardless, the first 2.5 hours are always the most active, and I call that the A part of the day. Now as we go into the B part of the day, which is the next 2.5 hours, believe it or not, things are not the same. They are different. Market slows down. It's considered lunchtime, even though it's not lunchtime for everybody. And what we're doing is we're looking at a relationship between what happens between A and B to help determine, should I buy or should I sell? And so the basic idea of this is that usually the market does not, I repeat, does not break above the range of A. If it does, consider that a trending day. So as we go on today through the day, 12 o'clock rolls around and the market continues higher and higher and higher, or lower and lower and lower in comparison to whatever range A was made. Consider that a trending day. Most trending days have this same characteristic. And as you know, a trending day is a great day to trade because you can do no wrong. You can just buy and buy and buy. You can just be a winner in every single trade, or a sell if it goes down. So if you realize that we have a trending day early as possible, take advantage of it, obviously, because that's the day that you can make a good amount of money. Now, that's not normal. What's more normal and what's more common is that once the market goes into the B part of the day, it begins to get stuck and flip-flop here between the support, the low of A, and the resistance, the high of A. So that is more common. About 70-80% of the time is what we see. It's only 20-25% of the time that the market actually breaks out and we have a trending day. So going on that theme, if we knew we had a trending day, would you counter trend or try to fight the trend? And the answer is no. I would not try to fight the trend if I understood there was a trending day, because I want to go with the trend. On the other hand, if you see that this is being contained between the support and resistance created in A within the first 2.5 hours, then every counter trend trade is good. Realize that this is support, so don't enter long or short thinking that it's going to break through it. Wait until it breaks through it. But any trade that you take, long or short, is contained within this area. So it helps me understand when I take a trade, I'm going to be a buyer, I'm going to be a seller. Where is it in comparison to the range of A? And do we have enough room leading me up or leading me down to the support and resistance? And will it break? I don't know. And now one other thing here about this before I show you some more examples. When we look at this breakout of a trending day, the key factor is that it should happen earlier rather than later. So when I see the market breaking out of this range later on, let's say 2 hours into the B part of the day, this is not good. This is not what I want. I want to see the market as soon as 12:05, 12:10, 12:15, just keep on going. That is a perfect ideal of a trending day, and I want everybody to take advantage of it, because that is where you can definitely take advantage of this, trend, right? We can do no wrong when there's a trend, and that's exactly what I'm looking at. And let me show you some examples of what I mean by that. So when we come back here to Friday, the previous trading day, again, if you do this manually, there's software that I have available that I provide to all the traders. But doing it manually is the same thing. You don't need the software. So 9:30 to 12 o'clock to 14:30. This again is the A, okay, the B part of the day, and the C part of the day. And just like I understand or I recognize, the volatility is the strongest in the within the first 2.5 hours. And then we get into the lunchtime or mid part of the day, which it starts to stabilize. And then we have the C part of the day, which is similar. It's not that strong, not that fast, unless we have news. And there could be a late day rally or late day sell-off in the C part of the day. So again, if you look at this here, this is the A range, the A part of the day. And when you have the A part of the day, what I see is that this support is going to be crucial. It's essential to see whether or not that's broken. So I can say we have a trend or there's resistance. And what happened? Nothing. Absolutely nothing. The market respected that support, respected that resistance, and just got stuck within the range of A. Now in the C part of the day over here, what I'm looking for is a late day rally or a late day sell-off, but the comparison is now between B and C. This is the comparison. And so before I decide to buy or to sell, realize that this is going to be resistance, this is going to be support, the low of B, and if we have a late day rally or sell-off, maybe on the news or earnings reports that usually happen right at the end of the day, I want to see the market trade and continue below or above the range of B. So a late day rally or late day sell-off is not in comparison to A, it's between B and C. These two ranges, the middle part of the day and the ending part of the day, which is smaller. So when you see the market begin to break, two candles starting to continue higher, perfect opportunity to be a buyer or be a seller, because now this explains and shows us that we have in the beginning of C, so that again, that's key, right in the start of C, that we're starting to break out, not towards the tail end of the day, but right in the beginning. And now you have an opportunity. And again, if you look at the ATR is about 3.5 points. That's pretty good. 2.5 points, that's still pretty good. So if you bought, Market moved 5-6 points to the upside. Definitely enough, at least if you wanted to trail a stop, or if you wanted to just take 1 times the ATR, which is a good recommendation to start off with, you're in good shape. So trending day, A to B, right? Compare A to B to see if it breaks out. Late day rally or sell-off, it's just a quick pop as the day comes to an end from here to here. Those are the 3 parts of the day. Let's take a look at another example. So this was Friday. Let's take a look at the day prior. So again, here is 9:30 to 12 o'clock. This is the A part of the day. So we have our expectations once again. Most volatile time of the day typically. So you can see here, absolutely normal. There's nothing going on. This is market opens. We begin to trade. Highest volatility. Be careful if it's too volatile when you trade, or go to a 1-minute chart. But more importantly, here is the high and here is the low created in A, the first 2.5 hours. So what this means to me is that if we are going to have a trend, show me, prove to me that we're breaking above or below this area. And so when I see the market begin to trade 1-2 candles and continuing, you can say to yourself immediately, we have a trend. I'm not going to fight the trend. So remember, counter trend trading, which really means that the market is going up and you're fighting it the entire way down. That is not something you should do during a trend, right? We don't want to fight the trend. We want to go with it. So when you do see the market continuing in that same higher, because we're referencing the high of A or the low of A, support and resistance, go with it. Don't fight it. A lot of traders try to fight trends. I think it's a mistake. Now, again, the key is earlier the better. So you can see here, this is 12:05, 12:10, 12:15, 12:20. Within the first half an hour, it's starting to break out. One candle by itself, it's maybe not enough because it could be a false breakout. The second candle right here continues 2 consecutive closings above the range or below the range is really my key factor or what I want to do. And here we have it continue. So if you have a trade that says go short here, go short here, go short here, I already know that there is a trend that's underway. Don't fight the trend. Now, the relationship between A and this is B, and B is between 12 o'clock and 14:30 Eastern Time, 2.5 hours. We're going to do the same thing, the relationship between B and the relationship of C. And if there's a rally or a sell-off, I'm going to take advantage of it. So again, B and C have their own relationship to a certain degree. If this breaks out, I'm long. If this sells off, I'm short. If it breaks out to the bottom. Now again, the earlier it happens, the better. So this is really happening here closer to 4 o'clock, which is right as the session begins to close. And this is not a good idea. It should happen sooner. So right away, I want to see if I'm going to think of a sell-off or a breakout to the upside, a rally, I want to see it happen immediately. So within the first few candles, it should continue, not towards the end. Let's take a look at one more day. Anyone have any questions though on this? I want to make sure that everyone's clear. If I look at another day from 9:30 to 12 o'clock, this is just the day prior, so I'm not picking and choosing days. I'm just going through the chart, showing you examples consecutively. Here is the range of A. And now I want to see if this is broken or this is broken as early as possible. So something kind of interesting happened here. The market came down, broke out, and came back up. So let's say, as an example, that you took the trade short. You said, okay, this is possibly a trending day. It's not right at the beginning of B, but I took it anyway. How do you manage this situation? Or what do you do? Or what, I guess you have to say, like, what's my stop? What's my trade management. So when I look at something like this, I say, okay, I'm going short here at 44.35.75, and I want to see the market go down. That's the goal, a trend. When it closes back inside the range of A, this is a false breakout. And I immediately get out of the trade and realize that the support is still being held, the support is still being controlled. It doesn't want to continue lower and lower because all the examples, once it breaks, it just runs away. But it didn't. It came out and then came back in. So get out of your trade if you're short and immediately go long. And that way you can recover once this happens, at least to recover anything that you may have lost when you took this trade. So if it's a false breakout and it comes back in, it just means that the support or the resistance is being held and you're able to recover by then switching positions and going long. So remember, this range of A is typically, when in trading in B, is traded within. So this being resistance, this being support, this can occur. Now, the difference between A and B, and then now B and C. In B and C, so here is C, like so. Again, we're looking at the same thing. I want to see if the market breaks above or breaks below earlier on, so I can take a trade as a late day rally or a late day sell-off. All right. Anyone have any questions for me on this? Very simple. It's price action. You can do it yourself. You don't need any software or the software that we provide. It's unnecessary. You can do it yourself. Same thing, just like this. A to B. There's no trend. B is contained. That's right. That's right. That's absolutely right. So on days that have FOMC, you'll see the pop occur in between B and C, right? So on days that have on a situation where you see possibly a rally or a sell-off based off of news, it's most likely based off the FOMC afternoon. So if we have an afternoon news event, expect there to be some type of pop or move that you can take advantage of, and use the ABC with that, in conjunction with that. If you're new to day trading and want to learn more on the benefits of trading the markets, visit DayTradeToWin.com. Join the next mentorship class starting later this month, and subscribe to the Day Trade to Win YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.